Welcome to a journey through the ever-mystifying and dynamic world of Bitcoin. Today, we're about to embark on an exploration that ventures beyond the usual chatter of cryptocurrencies. Stay with us, as we unveil a narrative that's not just about numbers and charts, but about understanding a future that's closer than it appears. In this exclusive feature, we delve into the depths with Lyn Alden, a name that resonates with authority and insight in the financial realm. Lyn doesn't just scratch the surface. She dives deep into the heart of Bitcoin's potential, unraveling the complexities of cryptocurrency investments with a clarity that's as refreshing as it is enlightening. But what makes this session different? It's not just another analysis or prediction. This is about piecing together a puzzle that's as intriguing as it is significant. We're talking ETFs, market liquidity, and investment strategies, but with a twist that will challenge your perceptions and perhaps even your investment strategies. Are you curious about how Bitcoin might transform in 2024? What role will ETFs play in this grand scheme? How does market liquidity influence the highs and lows of this digital currency? Lyn Alden provides not just answers, but insights that could reshape how you view the cryptocurrency market. Get ready to dive into a discussion that's charged with possibilities and grounded in expert analysis. This isn't just about catching a trend. It's about understanding the undercurrents that drive the very heart of Bitcoin's future. But before we unleash this wealth of knowledge, a quick reminder. Like this video, subscribe to our channel, and turn on post notifications. Your engagement helps us bring more such compelling content to you. Now, brace yourself. As we step into this riveting session with Lyn Alden, remember, every piece of information, every insight, is a part of a larger tapestry that could very well be the key to unlocking a future full of potential and promise in the world of Bitcoin. Let the journey begin.
I don't see any signs that Bitcoin is not going to continue to be correlated with liquidity. So I think one of the biggest challenges, everyone's kind of focused on the halving and things like that. And of course, that all matters. So the ETFs matter, the halving matters. The halving doesn't necessarily matter in the several months around the halving. Bitcoin's ongoing hardening is really important. But if you look at prior bull runs, there's a lot of variability around the halving. And I would say in large part, that's because it's actually liquidity that affected the timing more than just the halving. The halving helps set up higher highs and higher lows because it's how much Bitcoin's coming to the market that has to be absorbed, especially in a bear market, really matters. But the actual timing, 3 months, 6 months, 12 months is, in my opinion, far more liquidity driven. And it's like that's not going to happen anytime soon, most likely. One kind of description I've given is that it's been known for a while that if you have a gold slice in your otherwise 60-40 stock bond portfolio, it improves your risk-adjusted returns because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now, Bitcoin is like a rocket fuel version. I mean, if you look at that, Nakamoto portfolio or other types of resources that show what is adding a small slice of Bitcoin to your portfolio do, and it's like astounding for risk-adjusted returns. So it should, you'd think it would catch on quicker, but some traditional pools of capital just take a long time to make investment decisions. Generally, when someone, a small business where the owner just has majority stake, they can make very swift decisions. There's some publicly traded companies that are still, a lot of the decisions still held by the founder. For example, MicroStrategy. They're able to make quicker, more decisive type of decisions because they have that capability. Whereas, firms that have a lot more spread out decision making, it can be a very long time to actually meaningfully adjust a portfolio strategy. So I do think that the ETFs are going to be helpful, maybe less so than people expect right away, but I'm hopeful. I think the other thing that could potentially derail it is a liquidity problem in 2024 or a stagnation in liquidity. It doesn't have to be a liquidity crisis, but it could be that you have just another stagnant liquidity situation. So you have like 6 months of choppy liquidity, choppy Bitcoin, and it kind of lets out some of that consensus steam, and then maybe you run in 2025, right? So I'm not trying to predict any of those scenarios. Like literally, if we look back at the end of the year, if Bitcoin has dipped into the upper 30s, or if it's already 6 figures, neither of those scenarios would surprise me. because it's such a volatile asset and there's so much marginal difference that can happen. That's why instead I've been far more comfortable making 2-year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen it gets all shifted back 6 to 12 months, for example. I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in, and that process hasn't even started yet, based on any sort of on-chain analysis you look at. So I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening, or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.